so good to have you right here on Rush Hour this evening. And the big news really is the new age banking license. There are many that is going to be applied for at least today. Who wins the license is something we will know only when the RBI does make up its mind. A whole lot of discretionary process will perhaps be put into place. Special guest joining us, Maithili Busnoor, the consulting editor of the Economic Times, is here to take the proceedings forward, along, of course, with other experts. But the big news really is that there are 4 to 5 banking licenses that are on the anvil. How many will see the light of day is something we will find out over the course of next few months. Will this happen in Governor Subba Rao's tenure? One doesn't know. Will there be a woman's license, a banking license finally? That's something that the finance minister spoke about. That also one does not know so stringently. We also do know that large corporates, the Aditya Birla Group, Reliance Capital, some of those people really vying for a banking license. Some of the conspicuous ones who one thought would appear in this list have actually chosen to keep away. And so the ones that have kept away is Anand Mahindra's Mahindra and Mahindra Financial Services. They believed all along that the norms are very stringent. There's been a lot of speculation and a lot of debate over how stringent the NBFC's norms is, the CRR and the SLR, and that has perhaps kept a whole lot of people away. I would like to kick off the debate with Maithili here. Maithili, we're still awaiting the big guests that are coming on the channel to speak about this, but let's begin with you, because we have seen a flurry of applications that came in telecom. What we're given to understand is that we're perhaps not going to see the same wave of applications in banking. Did you anticipate it?
Well, yes, because the norms this time are far more stringent than they were either in 1993 or 2001. In 1993, when it was first opened up, the Reserve Bank actually got a little over 100 applications, and they finally issued only 10 licenses. But this time around, the norms have been tightened considerably, and you must remember that, you know, unlike in 1993 and 2001, for the first time, corporates have been allowed to kind of get a toehold in. In the 2001 guidelines, 1993, the RBI was very clear that industrial houses, corporate houses would not be allowed in, so much so that they said that even NBFCs, which had any link to a corporate house, would not be allowed in. So this time they have allowed NBFCs to kind of, you know, get a chance to convert themselves into banks or promote a bank. But despite that, because the norms are so strict, the general sense was that not more than 40 or 50 would apply. And of that, the discussion paper that the RBI first floated clearly said that the intention was to grant a limited number of licenses. And again, in the guidelines, which they've finally issued, they said that we're going to be very selective. And even if all the people who apply fulfill all eligible conditions, they're completely eligible, it is not necessary that they will get a license. So the RBI has buttressed itself with numerous caveats. So my sense is that not more than 4 or 5 really will get licenses eventually.
We're going to get you up to date with, in fact, in a minute from now, any minute, we will put out the names that have applied. Anirudh Ghosh will be getting us those details in just a bit. But let's actually showcase our kick-ass panel here to do this very important discussion on the new age bank licenses that we're speaking about. Ashwin Parekh of Ernst & Young, Vipul Jhaveri of Deloitte, and of course our very own Maithili are here with us to take this discussion forward. In moments from now, we will get you names of the applicants who all have finally really applied. Some believe it is very stringent, some believe it's a balanced guideline that has been put out. Ashwin Parekh, if I may come to you, and I would want to throw the same question to you as well. Maithili said it is a thought-out strategy. The RBI doesn't want everybody to flock in, yet it has opened the doors. It is keeping norms stringent with a view on that. Would you agree?
Yes, I mean, right from the very beginning, 3 years ago when the finance minister made that announcement, you carried an impression that we are not looking at, 10, 12, kind of licenses. We are looking at few licenses, and we are certainly looking at a process under which, let's say, once the regulator has really allowed them to work out their plans and to start operating, then he'll keep a very close eye on the performance, and then thereafter, sort of once again, perhaps reopen the process of giving more licenses 5 years later, who knows, So that is one particular thought that was going on right from the very beginning, sort of, There is some more interesting developments after that quickly. One of the developments that is happening is that, and Dr. Subba Rao, the governor, has talked about a paper that is going to come out with on the banking structures. And he's talking about the kind of structures we have. And in that paper, one of the things he's going to address is whether there should be a one-time window for new applications or a continuous one. So things may change as we go along, sort of,
Right. Ashwin, just hold your thoughts there because we've got news on the channel as we speak. The deadline for bank license application has ended. We're given to understand over 20 firms have submitted application for a bank license. Prominent amongst the business houses are the Tatas, the AV Birla Group and of course Reliance Capital. We are also given to understand that IDFC, L&T Finance, India Bulls and Religare are in the race very much. MFIs like Bandhan and Jan Lakshmi have also applied for these licenses and of course, like it was very widely speculated, India Post has joined that race. In fact, RBI is likely to issue new licenses by March of 2014. I would like to take this to Anirudh Ghosh before I come across to each one of you. Anirudh, these are the details we have at the moment. What else are you picking up? Any names that were conspicuous by their absence? Any of those which were conspicuous by their presence?
Well, it's been a very hectic day at the RBI. We saw a number of applicants flock in from the morning and all the way till about half an hour to the deadline really expiring. And of course, a couple of names that were conspicuous by their presence, as you mentioned, were India Bulls Finance. Of course, they've been on record a couple of times saying that they weren't interested in applying given the stringent nature of the guidelines. Most of the others, of course, as expected, you have the likes of Tata Capital, Aditya Birla Financial, Religare, Reliance Capital, and the list really goes on as far as corporate houses are concerned. Also, a number of NBFCs, the likes of Edelweiss Capital, IIFL, JM Financial, a number of them really did put in their applications today. We've also heard, of course, about a number of applicants who put in their applications well below the deadline. Just to name a few, Videocon was part of them. A couple of others like the Spice Group also did put in applications well before the deadline. Now, of course, it's of course too early to say who of these applicants would really qualify. But the fact is that a number of them have really buttressed their applications with a few things here and there. Like if you take, for example, Reliance Capital has gotten a guarantee from Nippon Life and Sumitomo Mitsui Trust to kind of buy into the bank if at all they do get a license. Religare similarly did get an investment from a bank from the US as well. So clearly a lot of preparation has gone into this, a lot of work has gone into this, and of course, from the RBI, a number of things we've been picking up over the past couple of days, and the chief thing among them has been the fact that the RBI seems to be very clear that they don't want to really budge from their guidelines, and of course this is a process that's going to take some time. It's going to be a very detailed process, and also the fact is that they aren't possibly going to give in to any of the demands which have been put forward by a number of NBFCs and corporate houses relating to the corporate structure and also relating to the shareholding pattern.
Anirudh, I'm going to come back to you for that question because I think that requires higher deliberation, but I would also want to welcome Mr. D.K. Mittal, former banking secretary and now advisor to the Ministry of Finance, who's joining us on our panel as we discuss the new age bank license. Banking on a bill is what we're talking about. But Mr. Mittal, are you surprised with what you have seen, or were you actually expecting this sort of a participation? This isn't euphoric as one had expected it to be.
I think the response has been average. There are a few issues, particularly with the NBFCs. If they become a bank, they have to bring money to service or to create SLR and CRR, which they don't have. So that is a problem to many of the NBFCs. Secondly, the structure which has been suggested is quite complicated in terms of the non-operative holding company, and that also is creating a complication for many of the corporates.
Let me take this question across to Vipul Jhaveri, partner at Deloitte, who's also joining us on this show. Vipul, did you expect in your assessment that these are the names we will perhaps see? Are you surprised at all with the list that we've just announced?
Well, quite frankly, no. I think all that we have seen as a list, they were the contenders and always, in the race for the application. So I think there are no surprises in that. The question really will be now, out of these, how many will meet the fit and proper criteria of the Reserve Bank, which is going to be quite a challenge for most of them.
That's a fair point you raise, and I would want to bring it back to Maithili, the fit and proper criteria of Reserve Bank of India. How discretionary do you think that is? I mean, fit and proper will be decided by an advisory committee, and that committee will have a whole lot of discretion at its disposal. Would you agree with us?
Oh, well, yes, certainly there is a committee, unlike in the past, and their recommendation is only a recommendation. So the final decision rests with the RBI, and the RBI has defined what is fit and proper, but in something like this there's always bound to be an element of subjectivity. But mind you, that's how it is, Supriya, all over the world. The central bank or the licensing authority has always been given that discretion, because in something like banking, you can never be too careful. As the 2008 crisis has clearly shown us, when it comes to banking, you have a whole lot of issues, moral hazard, ultimately taxpayers pick up the tab. So as far as banking is concerned, I think it's one particular sector within the financial sector where you can never be too careful. In the earlier experience with CRB, for instance, if you remember, there was the issue where CRB had been given the license and subsequently the scam broke. So the RBI got a fair amount of egg on its face. I'm sure it hasn't forgotten that. Global Trust again was a bad experience. So the RBI will be very, very cautious in deciding who is fit and proper.
You know, the RBI is often blamed for being conservative, but as far as sensitive money in banking is concerned, I think they are bound to be that. But Ashwin, Parekh, let me bring this across to you. Many people believe, and in fact, M&M Finance did pull out of the race to apply for a banking license, blaming it on a very stringent criteria for NBFCs. Do you also share that view that this is an unfair guideline as far as big NBFCs are concerned, the whole CRR and the SLR requirements?
Yeah, well, that's a very fair question. I mean, it is very unfair. Let's look at the detail. You know, where does the detail lie? I mean, when the announcement was initially made 3 years ago, we said that some NBFCs and others will get the license. Now, from that time onwards, we had 2 discussion papers which the RBI came out with. And in both the discussion papers, there was a very specific question about the conversion. You know, the question that was asked, and in fact, you know, several people were invited to meet with the regulator and then put their inputs. I was one of them as well. It's recognized in the final discussion paper that they put out. Now, when this was done, you got an impression that conversion, which was a major issue, you know, conversion because of several reasons. I mean, you know, we had established that if you are an NBFC of a size, anything more than about 18,000 or 19,000 crores, then conversion becomes very expensive to the extent you have to meet with CRR SLR from the first date. We had reminded them about the 1993 guidelines, 92 guidelines, which did allow a certain period over which, you know, the conversion could happen. So we said if the book, I mean the NBFC book has a certain duration, then that duration is the minimum that that particular NBFC will require to convert himself into a bank. And then you'll agree with me that if you have an infra book or a housing finance book, then your book has even larger duration, in which case you take larger. Even if you book new business in the bank, you know, and stop booking any new business in the NBFC, you still need time to convert your NBFC into a bank. And then on top of that, if you're required to meet with CRR SLR, then you have to wait with the only advantage you get, and the advantage you get is the CASA deposits. You have to weigh that with the cost that you're paying, you know, by foregoing writing that NBFC business any further and converting that into the bank. We did all the mathematics, you know, even during this time frame between February and now, I mean 3rd June when the clarifications came out, we did that. I mean, we were working with about 8 of these applications, you know, that you put out over here. And we pointed this out, that if you're an NBFC of the size larger than this, then it is extremely difficult for you to really meet with the requirements. Now the larger question is therefore, who does the regulator really treat as fit and proper? Someone who's got good experience, someone who's got a larger size of portfolio, someone who's been into this business for 2-3 decades, someone who's gone into rural like Mahindra's. I mean, who does the regulator really consider as fit and proper? I mean, within the NBFC sector, to be really converted into a bank. So that remains a little, I mean, open question to my mind, I mean, quite honestly.
Ashwin, if here I may ask you a question, because the RBI was very clear that as far as NBFCs are concerned, they have another option. They could have promoted a bank rather than trying to convert. So didn't that option give the NBFCs a little bit of elbow room, which if they wished, they could exploit?
They could. I mean, you see, once again, Maithili, that's a very good point you're making. See, if I look at the clarifications suggest that if I am into any financial service activity which a bank under the Banking Regulation Act can normally conduct, then in that case you're supposed to bring that business under the bank. So, I mean, how do you really, where does the coexistence, I mean, where do you draw a line? If you're required to meet that, if you're required to bring all those activities into the bank, then the bank is supposed to absorb that, in which case a CRR SLR is applied right from the first day. The priority sector lending requirements are applied from the first day. So this particular aspect that the guideline talked about, the clarification almost, took out that option, quite honestly.
That's a fair point, and I would like to elaborate upon that point with DK Mittal. Mr. Mittal, do you believe, given the fact that M&M Financial Services, that was always seen as a strong contender for a banking license, decided to opt out of it, do you realistically believe that the RBI perhaps has a case before it to further relax its criteria on statutory requirements or shareholding?
Yes, I understand many of the applications will have certain conditionalities attached to it. Now, it would be for the committee which RBI intends to set up to see that whether they want to agree to those conditionalities or not. And RBI will have a policy problem that if they agree to certain conditionalities, then they have to come as general relaxation. So I think this process has to go forward. We'll see that how does it happen. But let me say what would be appropriate at this framework from the country point of view, that RBI may consider granting application to everybody who is eligible rather than restricting any number, because then that will take away all rent seeking from the licenses.
I'd like to bring in Vipul Jhaveri back into this discussion. Vipul, if you actually just see the criteria that has been put in place, the applications that have come in, some big business houses are interested in setting up a bank. But it almost seems that the RBI, through its criteria, wants to keep the big business houses away. Do you agree with our assessment, or do you believe it's otherwise?
Well, actually the criteria that has been laid down, while it encourages large businesses to come into the banking business, but at the same time the size of the large NBFCs or businesses and the way they are organized really becomes a handicap for them to fulfill all the criteria that have been laid out. So while it is a strength for them, their size and scale and reach, it is also becoming a handicap in meeting various criteria. So RBI seems to be in a, the regulations or the guidelines seem to be in some kind of a conflict, and therefore it might really create a problem for larger entities rather than the smaller ones.
That's a fair point. Some kind of a conflict that the RBI will perhaps be staring at. Maithili, let me bring this across to you. You subscribe to the same view. The idea really is to keep the big business houses away, but the intention has not been made so apparently clear.
Well, I think RBI was criticized a lot for having a mindset against large corporates. It's not as if every corporate necessarily takes depositors for a ride. So RBI wanted to correct this impression. At the same time, they did want to open up the banking sector and say anybody who is fit and proper, who is eligible, can apply. And while it might not be correct to say that it's easier for a camel to pass through the eye of a needle as to get a banking license, I think the fact is that the 2008 crisis and the experience the world over has really left a mark on all regulators. So I think the lesson clearly is that you can never be too careful as far as the banking sector is concerned. And if you're looking at the intention of the government, which is really financial inclusion, then maybe something like India Post is best fit. So I really don't think the RBI's intention is to keep corporates out, but just to be very sure that ultimately people like you and I don't suffer in the process.
Absolutely, there's sensitive public money involved there. Ashwin, Parekh, let me bring this across to you. We've rattled names before you. LIC Housing Finance is a hopeful, so is an India Post. Besides, of course, Aditya Birla Group, Reliance Capital, Shrey Infra, some of the bigger corporate houses that we're talking about. If you look at it from the RBI's point of view, do you think the obvious bias is to go in favor of government-backed entities? It's always safer?
It is safer. Now, you see, let's once again look at the entire reform. I thought we started the journey by accepting the fact that we will admit the industrial houses. The argument of admitting industrial houses, and this is something which, in fact, if I look at the kind of capital that the banking system requires, let's say if I look at the next 5 years requirements for banking, for capital, to sustain a 6% GDP growth or a 6.5% GDP growth, we need about 16-17 billion US dollars of capital each year. Where is that capital going to come from? The regulator does not want that capital to come from foreign investors. Even we do not want. The deposit holders we do not want. So we do not also expect, that it coming from, the domestic sources to the institutional kind of capital. Retail capital generation from the banking sector point of view, you can see, we can see there is evidence in the last 5 years, private sector banks have not really created much capital. They've consolidated their books, in fact, in the last 5 years. So where is this capital going to come from? RBI had to take a view that it can come from the corporates, in which case we're talking about large corporates with good reputation, good name, who the deposit holders can trust. The regulator can really depend on, a good governance and good order of, let's say, working of the bank. So it's that. I thought I was right. In this last 3 years, I was going on that premise that the regulator may look at least making the doors open to 3 or 4 or 2 or 3 very reputed ones, those who are present in this country, who really, assisted in the development of this country. So that was one part of the corporates. As far as the government entities are concerned, we do not have too many left. India Post is one of the major contenders and a strong contender from the inclusion point of view. Then, of course, we've got IFCI, which is one of those remaining DFIs, Development Financial Institutions. In some form, it has some good, valid reason why it can become a bank. So we aren't talking about too many government entities as such. 1 or 2 perhaps at the most, 1 or 2 corporates and 1 or 2 NBFCs would be, I thought, a good mix. But of course it's up to the regulator. But I thought that would be a good mix to look at.
That's a fair point. It will be a good mix to open it to some of the large responsible corporates and also get the always assured government entities in order. But a man who has been in the government, Mr. D.K. Mittal, between LIC Housing Finance, that's also very interested in a license, and an India Post, which one do you think perhaps weighs more as far as the RBI's discretionary power goes?
LIC Housing certainly would be a better candidate because the work they are doing, and they are doing the financing sector. India Post is doing a financing of a very different kind, and they have many more issues to manage than managing the post offices, than managing the bank is a very complicated issue. So let me say on this issue that the post office staff is not competent to do banking. Now if they have 150,000 post offices, how they are going to have those many branches? And if they can't convert each post office into a bank, then what is the purpose of having a post office bank? So I think the issues need to be looked at from that perspective rather than being in an interdepartmental issue.
All right, fair point. Joining me on the phone line now is Mr. Hemant Kanoria, the Chairman and Managing Director of Shrey Infrastructure, one of the companies that has actually gone ahead and put in an application for a bank. Mr. Kanoria, how hopeful are you of banking here in India?
No, I would say that it's a 50-50 probability, because always if we calculate the arithmetical probability, it is a 50% chance. And we have put in our application last week on the 27th of June. And now we need to see that what is the decision that RBI takes. It's not going to be an easy task for RBI because there's so many applications, and all the companies which have applied are very good and reputed companies. So it will be a tough task for RBI. So it's very difficult to say and take a guess as to what is going to happen.
And so many of your other friends in India Inc. who have applied obviously don't make it easy for the RBI to make that call. But do you share the view that some of your other colleagues from the industry have voiced? The fact that the guidelines are too stringent. The fear is that this is perhaps going to make it very tough for big corporates to get in, and will also make it tougher for corporates with NBFC arms to actually crack a banking license. Do you share that sentiment, or do you think otherwise?
No, I think that, you see, RBI basically, after taking into account, it has been a very fair way that RBI has proceeded on this entire path of giving a banking license. So they have welcomed, there were discussion papers, and there were draft guidelines. There has been a long procedure which RBI has taken. There were all kind of questions which came up from the industry, and RBI replied. And after that, they came out with the final guidelines. Now, RBI is the regulator. So if a regulator has come out with the final guidelines, whether we like it or not, whether, it suits someone or it doesn't suit someone, this is what we need to follow. And whoever is in a position to follow that, and the choice is for the candidate and for the company which is making an application. So if the applicant feels that no, RBI is not very fair in putting in the guidelines, then they need not apply. But if RBI has put in some guidelines, we have to very clearly follow that.
All right, guidelines will have to be clearly followed, but do you think there's merit in the argument that some of the applicants have voiced that they've applied because they expect the RBI to review at least the NBFC part of the norms? Do you think that is going to be a certainty? Because some of our panelists here, and I'm going to bring them on board in just a bit, have said that perhaps there will be a window as far as the RBI's relook at that stringent criteria is concerned. Do you expect that to happen?
I don't think so, because you see that the way that we have been dealing with RBI for the last more than 2 decades, once RBI has taken a decision on something, unless it is very compelling to RBI, for RBI to reconsider and change it, they don't change it. So they take a decision based on a lot of logic, discussions, and also fairness. So I'm not very hopeful that RBI will change a lot of their guidelines to accommodate many of the applicants.
Hemant, within the various categories of applicants, where you look at financial institutions, brokerage houses, NBFCs, corporates, cooperative banks, which category, if one can just pinpoint, you think stands the best chance of getting bank licenses?
Again, that's a very, very difficult question, because as I said that, RBI is going to be in a very difficult situation to decide that whom to give and whom not, because it's going to be, because, all the applicants which have made applications, some are representing very large business groups and industry groups in the country, and they do merit. Similarly, there are a large number of NBFCs also who have applied, and all of them have done a good job in the last 10 years, 20 years of their existence, 30 years of the existence. And then there are microfinance companies. So I think that RBI will have to do a mix and match of it, seeing that, where there is, which areas are unbanked, who is covering the unbanked areas, because that is going to be one of the important areas for RBI to make a decision. And another point also RBI will need to consider is that it should not just be a Me Too bank, because as it is, there are very large banks in India, they're doing very well. And for just a newcomer to be in a position to compete with them is not going to be very easy. So I think that it's these kind of considerations will have to be taken into account before taking a decision. And I'm sure that RBI would be doing that.
And what is your sense of how long the entire procedure will take? Because after all, the high-powered expert committee, we still don't even know the composition. The members have to be appointed, they have to go through all the applications. So what is your sense of how long the entire process will take?
That's a very difficult question, because, it's like doing a crystal ball gazing on what RBI is going to decide. It's taken them 4 years to come out with a process, and finally the applications and the date were finalized for 1st of July 2013. And it's been a process of almost 4 years, because 4 years back the government requested RBI to consider to give new licenses. So I think that it will be difficult to say that when they will decide. But at the same time, because they have received the application, the process will start off, and it would take some time. I'm not very hopeful that in the next 3 to 6 months they will be giving the licenses. It may extend to almost about a year and a half before any license comes out.
If I may ask you a slightly naughty question, does it mean it will come after the elections or before the elections?
I don't think so that before the elections it will be possible, because for RBI to issue licenses before the election means that the government needs to really, really push RBI, which is not going to be very easy.
RBI doesn't like to be pushed, and we will perhaps not be able to push the RBI to come up with banking licenses anytime soon. We have many more questions, and within moments from now, actually, the Banking Secretary Rajiv Thakru will be joining us live right here with his side of the story. What does North Block believe about this whole banking exercise? But before I do that, Ashwin Parekh, we were speaking about the fair composition that you believe. 2 private, 2 public will be a fair mix. Is there merit then? And I'm going to ask you a contrarian question. Giving out licenses to every applicant, why just restrict it to 4 or 5 and let the market decide who can survive?
Well, I think Maithili did touch upon this. This is a very interesting question. It keeps on coming up again and again. You see, to begin with, if we had a different banking structure, if we had a structure under which, you had very distinctly different kinds of banks. You had, let's say, international and large national banks. You had, let's say, at the mid-tier level national banks. and you had community banking like you have in the US, then, like we had cooperative banks at one point in time, then perhaps we could have looked at more number of licenses, because local area banking, as it was experimented even, about a decade ago, didn't take off because somehow or the other, the entire set of regulations and the market conditions today, are such that the only thing that works in India is not niche banking. The only thing that works is universal banking. Now, if I look at all the applications that these people have put out, I have my own doubts. If I look at all the names, we are all talking about pan-India banks. We aren't talking about niche banking, and therefore, to answer your question specifically, we can't be talking of 20 licenses or 15 licenses. These are going to be pan-India banks. So that's one. Second is systemic failures is something the regulator has to worry about. Now, banking system, we have seen in the past, if I look at last 2 decades of experience, whenever a banking company has, let's say, failed, what the regulator does immediately is he starts ring fencing the bank in such a manner that the deposit holder's interest is protected. We've seen this, with the exception of cooperative banks, where a certain different kind of ring fencing had to happen, and there the size of systemic challenge was much lesser. So we went into a consolidation process and reduced the numbers of cooperatives. We were in the process of doing that. But for pan-India banking system, to have so many licenses is difficult. Quite clearly, the kind of banking we are talking about, it is difficult, I would say.
So the more the merrier doesn't really hold good for Indian banking. Maithili, I'm going to bring this across to you. We were having a chat about how many people believe if you give out more banking licenses, the markets will decide. There will be mergers and acquisitions. The finance minister has time and again spoken about, a big Indian bank, something to the tune of a Citi Group, a big financial conglomerate. But do you think the pain that the world has seen in the finance space, and I'm going to take this question both to you and Vipul, we cannot have a bank which is too big to fail because it really takes the economy down with it. We saw it happen in the United States. We cannot let that repeat in India.
Yeah, that really is the thinking post-2008 crisis, that if a bank becomes too big, it becomes much more difficult to allow it to go down, and invariably taxpayers have to come right to the rescue. So it is better, in fact, to have smaller banks, which you can afford to have them go down. It has happened in the cooperative sector, as Ashwin just mentioned. So I think this entire focus on, mergers, acquisitions in the banking space is a little overdone. My preference really is now for banks which have an economical size, are efficient in the financial services area, rather than just go for size per se.
All right, that's a fair point. We cannot have a bank that's too big to fail. But Vipul Jhaveri, I would want to bring it back to you. There was a point that both Maithili and Ashwin made on broad categories. We've seen financial institutions apply. We've seen large NBFCs apply. We've seen big corporate houses apply, brokerages for the first time, cooperative banks. And like Maithili was pointing out, who do you think stands the best chance of getting a banking license here, suits the RBI fit and proper criteria the most?
Well, again, I think it will be a mix, in the sense there will be a couple of industrial houses who would get, a couple of NBFCs who would also get, and really about five odd applicants are likely to get, because RBI also, you see, we must remember their own ability to regulate is also limited. They can't really regulate maybe 25 new banks in addition to the already existing banks effectively. So I think they are also taking relative.
Vipul Jhaveri, hold your thoughts there. We've got a special guest, Rajiv Thakru, the banking secretary, joining us live here with Mrinalini Krishna in conversation after the banking application deadline has ended.
The number that, do you think it's a tepid response, or is it pretty much in line with expectations?
I don't have the number with me right now, and we'll await information from RBI. But if you're saying it's more than 20, it is more or less in line with what we were expecting in our informal discussions, and no, I think perfectly fine.
Sir, some corporate houses have opted out of the application simply because they believe the norms were too restrictive. Is that something that bothers you, or are you happy that there are lesser number of applications, so they'll be sorted out even further?
No, I really can't say that we are happy, because there are lesser number of applications. Sorting them out is no big deal. It just takes a little bit of time. But it's nice if people realize that they are not capable of fulfilling the conditions and opt out rather than clogging the system. So good, makes the job easier as far as RBI is concerned. We have no problem.
There are also some sector experts who found the license guidelines very restrictive, and they have said perhaps there could be a case for revisiting these guidelines. Because of this response, do you think there is a case for relooking, revising or relaxing these guidelines that the RBI has put out for new bank licenses?
I am not quite sure what these people are talking about, because there's a standard principle of justice. You don't change the rules of the game once the game starts. So guidelines, once they have been put in the public domain and once people have moved in and there are people out there who think they can satisfy these guidelines, I don't think anybody in his, who knows the environment would talk in terms of changing the guidelines midway. So that certainly is not advisable, and I don't think it's going to happen. That is point number one. And point number two is that in any case, all the people who have applied, and we have been giving this guidance to anybody who asked us in the last 2 months, that RBI is giving you more than enough time. I think 18 months they're giving them to fulfill the conditions. So each company, if they were serious, could very easily align their systems to adjust to the guidelines. So I think for anybody to expect that RBI should relax its guidelines, make it easier, and when I say easier, I say it within inverted commas, was, I think, being optimistic. And RBI has done the right thing by sticking to their guidelines. And I think we are more than happy. We have no problem if we get a number of good applicants. That should be good enough for us.
How many licenses do you think can be given out by the RBI? Is there a cap to it that has been informally decided? And by when do you expect the first license to be rolled out?
There is, this question has been answered again and again and again. It's actually ad nauseum by now. But there's no discussion on how many licenses have to be given. We have to work backwards from our requirements. But that depends entirely on what kind of applications have come. And that we will come to know only once the applications have been duly scrutinized, which will take a little bit of time.
But can there be a case where all applicants are given licenses?
No, I would say, of course, theoretically there is a possibility that anything can happen, but I would say it's highly unlikely.
So any number that you can point out for us?
No, that would be inappropriate, and I think totally out of place to hazard a guess at some number which has no base, because at the moment we don't even know what kind of plans have been submitted by the people who have applied. We would need to see that, and I'm sure RBI will be looking at that very, very carefully, because then we'll get an idea of what kind of inclusion we are looking at.
Let me rephrase the question. What is the requirement of India as far as new banks are concerned? How many new banks are required by the country?
No, I think let me rephrase your question and ask the appropriate question. And the rephrased question should be, what is the requirement of India as far as banking services are concerned? Not how many new banks are concerned. It is irrelevant whether you have 20 new banks or 40 new banks or 10 new banks. What is important is that banking services reach the people. And for that, the latest figure put out in that survey, I think, was what? India has 10.64 branches per 1 lakh population, which is again very, very low. So there's a lot of scope out there for new bank branches, not for licenses. We are not talking about licenses. If a particular licensee can open 100 branches, well, that's one kind. There's another licensee who comes and says that they'll open 2,000 branches. Well, so I think we have to see the whole thing in that perspective. And that's exactly why I said that we need to read the applications carefully, see what kind of capital they are bringing in, what kind of plan of action they have. And only after that can a decision be taken on how many people are going to move in.
What kind of an appetite have you seen from public sector units as far as our applications for new bank licenses are concerned? We've heard reports about India Post moving to make an application for a bank. I'm sure there are others. What kind of an appetite have you seen? What is your sense as far as PSUs opting for bank licenses?
I make no distinction personally between a PSU and a private operator. Ultimately, it's a race where everybody stands at the same point when you start and you finish at the same point. And you better run faster than the other guy, otherwise you don't reach there earlier. And if you don't reach there earlier, you don't win. So, as far as we are concerned, we don't really see public sector as having any kind of either an edge, and we don't even bother about who's got what kind of an appetite. The applications are going to be examined strictly on merits and decided on merits.
Sir, do you expect M&A activity to increase in the sector now that the applications have started coming through, or do you expect banks to be set up from scratch?
It's very, very difficult to say anything on that today. We would have to see, as I said, we would need to see what kind of applications have been made. And I see no reason for hazarding a guess on this today. That would be almost like an astrological prediction. All we have to do is wait a couple of days and we'll know exactly who's put forward what kind of a plan. And well, your question will be answered.
Right, question will be answered is the answer that's coming in from Banking Secretary Rajiv Thakru. I have time for final comments from my expert panel here. Maitli, let me begin with you. He did not give a commitment. Mr. Thakru left it very open and it said if market conditions were to change, if this were to happen, who knows, there may be a change in guidelines midway. And then, of course, he immediately corrected himself by saying, but, you know, this has been very well thought out. I don't see the RBI doing so. Given the pressure there is and given the clamor there is for a banking license by some of the really large corporates who have big NBFC arms, do you see that as a possibility?
No, in fact, what I like most about Mr. Thakru's comment was that he was very emphatic that the rules will not be changed once the game is begun. Now, this has been a charge that has often been heard of this government, that the goalposts are very often shifted in between. And it's very good to know that in something as important as banking, at least the banking secretary is with the RBI, that once the rules have been framed, they will not be changed because it's much too dangerous. So that, I think, was the key takeaway from Mr. Thakru's points.
All right, the rules of the game do not change once the game has begun is the word from Rajiv Thakru. Maitli believes that is a good thing. The goalpost will not be shifted. Vipul Jhaveri, let me come to you for your final comments. He says there's no definitive cap on the number of licenses. It's unfair to talk about who's going to win and who's going to lose, but 4 or 5 is what was essentially talked about. When you hear Rajiv Thakru, do you think there's an understanding between the government and the RBI that let us see how many have applied, what is the criteria, what are their plans, and that number may actually go up? Is that a sense you're getting?
Well, really, the number may not go up or down significantly, but I think what I hear and what I would also agree is that ultimately it will depend on the credibility of the business plan which each of them have put in the application, and whether it meets with their financial inclusion objectives, the growth in terms of banking capital that they want large corporates to bring in. So I think these few things will really play on their mind in deciding whether to allot to which of these applicants, as also how many to allot.
All right, how many to allot? Ashwin Parekh, a final comment from you. 18 months, is that good enough for a time? Is that a good enough turnaround time for anybody who's interested in a banking license?
Well, I mean, once again, 2 issues. One is the kind of book you have and the size of the book. If you are an infrastructure finance company, then it will certainly take you longer. If you are a housing finance company as well, or if you have a very large book, then it does take you a little longer. In the past, there has been precedence. There has been enough of it. In 1992, when the licenses were granted, almost all those who converted their NBFCs into banking companies were given time. Centurion Bank was given time, IndusInd Bank was given time, even Times Bank was given time, you know. So there was time made available. Once a fit and proper, let's say, examination or evaluation was carried out, then the regulator did believe that there was a good reason for the regulator to allow that particular entity to do its, you have to do it in a profitable, most sort of, doable manner. So it did that in 1992. Even in 2000, 2001, we saw that. When we saw the 2 licenses, we saw that the regulator was available, to really make the 2 new guys, I mean, give them at least adequate comfort to really roll in their book into the bank. I thought there was nothing wrong. We're not changing the rules of the game. You're not doing anything of that sort. You're just recognizing that once a person is to be admitted, look at the pain that he's going to go through and perhaps take a view, more practical, more pragmatic, I thought.
All right, taking cognizance of the pain that big corporates will perhaps go through or big NBFCs will go through to convert into a bank is a pragmatic approach by the RBI, and like many of you here believe, the rules of the game should not be changed. At least that's the one big allegation against this government. It would not want more muck on its face. Thanks very much our expert panel for joining us this evening as we begin discussing the new age bank licenses and the next wave of Indian banking. It's been a pleasure being with you this evening.